Okay, thank you so much, everyone, for coming in. All right, we are starting day 2 of our Community Resilience Partnership Program Forum for 2025. Great to see you all here. We hope you're energized for another day of learning, sharing knowledge and experiences. I have a colleague, Pe Wongkitote, if I'm getting your name correct, who's done a, thank you, there you are, thanks, who's done a nice graphic visual of yesterday's work on urban resilience. So we're going to start there just to give us a good recap on all of the amazing discussions that happened yesterday. So over to you, Per.
Thank you so much, Kate, and good morning, everyone. I'm Per Wongtitiroth, and I'm a graphic recorder from Bangkok, Thailand. And yesterday, I had a chance to do some doodling around the corner, harvest the conversation that matter around the topic under the urban poverty reduction programs that strengthen community resilience. So please allow me to guide you through the journey and flash back the memory together. So let's start. We started with the urban challenges, the challenges that we face today, hotspot, climate hazardous, who is affected the most, the poorest suffer most. Not only climate shocks, but I'm also shocked 14 times women die more than men. Help takes too long to arrive because the silo system doesn't help. Flash floods don't just flush away jobs. They bring losses and the risk of diseases. Although people know this, migration to urban cities still exists. The impact is irreversible, so we must tackle it. Yes, we can do it, because the community are the solutions. Let's cross the bridge to move forward to new possibilities. An inclusive space where we engage women and youth, empowering them with green and leadership skills. The key is to strengthen PPCP, a new sustainable public-private community partnership. But how? We have highlighted 2 key spotlight areas yesterday: advancing community-based green infrastructure and enhancing social systems. There are already solutions around the world: Nepal, Bangladesh, Australia, Indonesia, India, and many more. With every step we take, we created new movement. Hope. Innovate financial inclusion is our hope. At global, national, and local levels, we are one. Think holistic solutions, climate insurance, social protection programs, diversify investments to ensure every dollar we spend is through the lens of nourishing equality, poverty, and climate lens. Don't only look at number, look how changes can deliver. Look, the pro-poor urban system for better living conditions and livelihood that we can tailor-made for locally led adaptations, and the better plans and policy can be improved to maximize the impact. So here is just the overview of my lens, the short summaries. But to finish these drawings, I still have 2 tiny boxes on the top here. The left is for the community and the right is for the local government. So if anyone have any idea, where can we start the conversation? How can we co-create the conversation to create the greater impact together? So if anyone wants to share, please feel free. I can fill in out and maybe later on at the vision board outside. So thank you very much.
Thank you, Per. That's just an amazing visual, and it's such an amazing thing to put. You know, they say a picture can take 1,000 words, and you've just summarized thousands of words that we expressed yesterday in one image. So thank you very much. Thank you. Okay, well, thank you so much, because that's a great segue also from the urban resilience to the financial inclusion side to really start our conversation for today. So, I mean, just to start on financial inclusion, as we well know, access and ability to use affordable financial services, from credit to savings and insurance, are crucial in helping build the climate resilience of communities. It provides necessary financial tools and resources for people themselves to proactively act, manage and adapt and recover from climate-related shocks. So for many of us who have worked in the financial inclusion arena, you do hear firsthand accounts of just how powerful these tools can be. So today's objective, or the objective of this session, will be to really allow us to appreciate the link between climate resilience of poor and vulnerable people and financial inclusion, to have a more descriptive effort around the investments on financial inclusion and how they can strengthen climate resilience, and to identify the opportunities and challenges for improving people's access and use of affordable financial services so that we can really contribute to building climate resilience. We're going to divide this session into two main parts. We've got two scene setters to present and open up our palette for the day, and then we'll have a plenary discussion to look at some of the challenges and opportunities from different colleagues around this work. I do believe we're going to start, though, with a Mentimeter, just to allow us to get your thoughts. And so if you could just kindly scan the QR code or type in the code 22585653, and then we will get your thoughts. Okay, so our question is, how many additional people could climate change push into poverty by 2030? I think there's 4 answers to pick from. We've got 50 plus people already contributing. Fantastic. Just shows how many people are in the room when you see the number there. Wonderful. Maybe we show up the answer. So it's 130 million people that could be pushed into poverty by climate change by 2030. So well done for those who were able to give the correct answer there. It's a significant number, so hopefully we can address some of that through financial inclusion. I have the pleasure of asking Ms. Helen Warby, the lead of the Global Partnerships for the Alliance for Financial Inclusion, to start us off with a presentation on this topic. Helen, please. Forward in the slides. Yeah.
Good morning. Thank you so much for giving the Alliance for Financial Inclusion the opportunity to share some of our work this morning. I would very much like to thank all the organisers, both front of house and behind house, for being able to do this. My name is Helen Walby. I lead the global partnerships work at the Alliance for Financial Inclusion. I know that some of you know AFI quite well, but for those of you that don't, the Alliance is a membership organisation, and we are a global network of financial regulators from across developing and emerging economies. We have 90 members. They're mainly central banks and ministries of finance, and we work on bringing smart policies to life to bring banking to those who are unbanked or underbanked across the world. Inclusive green finance is one of the key areas that we work on. So I wanted to just be able to give you a little bit of an overview of why financial inclusion matters so much, and also to get you thinking about how policy and the levers of policy can be utilised to be able to bring support to those people right at the grassroots as well. So our members are really committed to working in this arena. They've made now 1,200 Maya Declaration commitments. That's a platform that we use for our members to commit to their work. And they also now have implemented more than 920 policy changes across the world, which has supported about 840 million people to become financially included. So the impact of their work is really quite significant. And this is areas where both the private sector and civil society can reach out to these institutions to be able to engage, to inform, to be able to help provide data, and to be able to ensure that policies that have been developed are really inclusive and help support those who are right at the base of the economic pyramid. Because we know that those people who are most disadvantaged and vulnerable are being impacted by climate change the most. We also know that as we move into a much more digital world, there is a much greater risk that those people who are not digitally financially literate can be left behind. And then when we look at the intersect of things like gender and living with a disability, people from the LGBTQI+ communities, those disadvantages are compounded. So it's really important that when we're thinking of developing policy, that it is truly inclusive and that we make sure that everybody has an opportunity to be included. So one of the things that we look at on a regular basis is obviously stability. That is the core mandate of our members. So it's really important that when we are looking at the physical risks that climate change brings, with extreme weather such as hurricanes and rain and drought and heat waves and rising sea levels, we know that these cause obviously terrible human suffering and displacement, but they also cause instability in the financial system, and they also cause significant risks and costs to businesses. So this is where the central banks are able to look at developing policy that will help mitigate some of this impact. So how can we ensure that operating costs are kept low? How can we ensure that businesses still have revenue streams even in the face of climate challenges? How can we ensure that businesses access supply chains? Especially for smaller community businesses, it can be really hard to be able to access national and international supply chains, and our regulators have a role to play in being able to develop policy that will help support this. We also can see that as we're transitioning to a low-carbon economy, businesses face significant risks when they're moving to less polluting sectors. It can affect operations across whole sectors of the economy, including shifts in asset values and even having assets left stranded. So it's really important that policy and legal frameworks are in place to be able to mitigate against some of these transition risks. It's really important that technology is able to be affordable and accessible to those who need it to be able to move their businesses, and that there are markets and access to market routes available to them. Because for those people that don't choose to transition, there can be a significant risk to their reputation, but for those people that do, there can be a positivity bonus that they can capture from it. So regulation plays a really significant role in how we mitigate and move from those risks into a much more inclusive and green ecosystem. So when we're looking at this, we hear a lot about in green finance. We don't necessarily hear so much about inclusive green finance. But what we can see on one side is that we have the just transition. That's at the top of our screen. That's where we want to be. We also, from our regulators' perspective, have at the bottom where we also want to be, which is financial stability. But also we can see that on either side of this, we have the climate change impacts and environmental degradation, and we also have increasing social inequality and tensions, and especially with some of the things that are happening across the globe at present, this is something that is absolutely front of mind, because those people in the middle, those vulnerable groups, they are the people that are going to be impacted the most and have the most, well, they have the least to lose because they have the least, but they also have the most to lose because they have less resilience and less safety nets. So it's really important that we ensure that they are cared for. Let me just move on. So how can we do this? And this is where the regulators can play a role at a national level. So the regulators are able to develop effective policy to support savings. Even if you go from the absolute grassroots level of village savings and loans groups, and then you look at how you digitize those, it's really important to be able to reduce the risk of people saving informally and be able to protect their savings, because if they have an adverse event happen to them, being able to access savings can really increase their resilience and their opportunities to recover from it. We also can see a really significant role that the regulators can play with providing access to credit. This can be things around supporting small businesses with loans to be able to buy more resilient crops, to be able to support businesses to digitize, being able to access affordable credit and understand how to use that credit is really, really important for small businesses. We also can see with this move to digital technology, having digital financial services that are designed for everybody in society, particularly understanding the needs of women, because the needs of women are different and the opportunities for women to be able to use digital financial services are different. So it's really important that policy is there to enable it, but also that those digital rails, especially when we're looking at things like payment systems, are there. Being able to have social payments or private sector payments made directly to your mobile phone, that you understand how you can use those, and being able to take things forward with your business or be able to support your family, make a really big difference, especially in the period straight after a disaster. Being able to get money to those people who need it most, especially with offline digital payments, can be absolutely key in those critical few days and weeks to people being able to survive the initial period and then also be able to start rebuilding. And then lastly, there's obviously insurance. And we can see that there is a real opportunity now with doing things like crop insurance, using microdata to be able to support businesses and ensure that if they are facing climate challenges, that they have the necessary protection for them to be able to weather those potential storms. So these are all areas where our regulators can work and develop policy. And these are also areas where those people who are affected by that policy can provide input into the formal financial system, input into the regulatory authorities to be able to say what's really needed on the ground, what's really going to help people the most. So AFI does it through a framework. So we have something called our 4P framework. For anybody who would like to deep dive, I'm going through these slides quite quickly. There's a lot of information on them, but they're going to be shared with everyone afterwards. And of course, you can access the AFI website, and you will find some really good publications, really taking you through the 4P framework and how you can use it. But we're first looking at promotion. So it's really important that there is awareness and incentivization for the private sector to offer green projects. You need to make sure that you build the business case, and the regulator can help do that and help articulate that, especially through the regulated industries that they work with. Then if we move on to provision, this is about ensuring that there are resources actually made available for green projects. How can the regulator help channel funding both from the government and private sector to be able to resource these projects? This is really, really important, because if you've got the will, then you certainly need the resources to be able to do it. And then how do we look at the aspect of protection? This is about reducing the risk by socializing losses through things like insurance, credit guarantees, social payments. This helps provide the safety net that's needed to help recovery. Credit guarantees can be really, really important for women-led businesses as well, because even though we know that generally women-led businesses have lower levels of non-performing loans, they generally are a better risk to lend to, that, they're less of a risk. We still see that a lot of financial institutions don't want to lend to them, so being able to do things like provide the credit guarantees can be really important for those women-led businesses. And then lastly, looking at prevention. So this is how do we tackle things in advance, not after the fact. So we can see now that a lot of our members have developed ESRM guidelines, and we're also there to provide support for them to be able to do it. So I really recommend, if you want to have a deeper dive, go into one of the AFI knowledge products on the website, and you'll be able to really look at how that 4P framework is utilized. But let's see how we have done some of it in practice. I'm going to give you a few very brief examples because I'm conscious of my time. In Fiji, we have looked at how we undertake national demand-side surveys. Now, you see these happen in a lot of jurisdictions, but what's been really interesting in Fiji and Vanuatu is that they have put in specific questions into the demand-side survey about the impacts of climate change. And that gives them core key data that they can use to help develop their policy. What was particularly interesting in Fiji was that not only did they have the questions on climate, they had plenty of questions around gender to understand how women use financial services, what the barriers were, what the opportunities were. But they were the first member in our whole network who put intersecting questions in to understand how climate impacted women. And this is a really good opportunity because when these national demand-side surveys are developed, the regulator really needs to know the right type of questions to ask. So for those bodies who are working on the ground, being able to interact with the regulator when these surveys are coming up to help ask the right questions is absolutely key, because getting the data then informs the policy. So those are some of the examples. We can also see something that is being worked on by many members, and I know that some of the people from Nepal are in the room, and we're doing this in Nepal as well, is developing green finance taxonomies. Because if you are going to be lending to things that are green, you need to define what constitutes green in the first place. So those taxonomies are really key, and we see many of our members now working on those. We can also see work in the Philippines, and it's really good to see that know your customer requirements can be quite a barrier to access to finance, because you've got to provide particular forms of identification. And for those people in really rural or remote communities, providing that can be really difficult. But we've seen in the Philippines that in periods of crisis, they've been able to relax the know your customer requirements to be able to get people basic bank accounts with lower requirements to make it much easier for people. And again, specifically women, a lot of women don't have access to formal ID. This can be a real game changer for them, because then they can obviously access digital payments and get social protection payments. I'm not going to go through all of these because I've put quite a lot on here. My buttons aren't working. We also have examples from Nepal. I'm going to touch on the parametric insurance very briefly. We can also see from the private sector, a lot of the time when they're working in the Pacific, they say it's really expensive. There's a really big issue of scale because we're going into small economies. And how do we have a good enough private sector business case to be able to invest? Well, a lot of the work that AFI is doing now is around developing regional approaches in the Pacific. We actually set up the first World Sandbox, and it focuses just on the Pacific region. So members can come, or private sector can come into the regional sandbox, and once they have been validated, gone through the sandbox process, they are then regulated to operate in all of the AFI member jurisdictions across the Pacific. And that suddenly means that scale is much more achievable. They can access all of those markets much quicker with a much lower cost. And we're now looking at how we can work on parametric insurance across the region as well. So there's lots of opportunities where regulation can really work in tandem with the private sector to be able to take these things forward. So just briefly, where has AFI been working on this? Well, we actually started coining the term inclusive green finance in 2015. because we could see that these large green finance infrastructure projects really weren't reaching those people at the base of the economic pyramid. But we could also see the role that financial inclusion was playing to be able to support them. And if we could find the inclusive intersect between green finance and financial inclusion, we could see an enormous opportunity for policy to be able to drive things forward. So we started working on this in 2015. In 2017, our members signed a global accord called the Sharm el-Sheikh Accord, which is their big commitment to being able to take work forward in this area. Again, all of the AFI Accords are on the website if you want to have a look at the details. And they reiterated their support to this, I think it was in 2022. By 2019, there was enough work going on in the network that they actually set up a technical working group. And these are really valuable resources where the members can come together and share their learning and experience and drive policy forward. And now we have 60 plus members in the working group. We started off with only 14. And also, when we started working on this, we have 7 policy priority areas in AFI, and green finance was always at the bottom. For the very first sort of 5 years of this, green finance was not our highest policy priority for our members. And as of last year, it's gone up to second. So you can see that even in quite a short space of time, even the central banks really now realise that this is an absolute imperative to be working on, and there is a real push to develop policy in this area. I'm hoping to carry on. So where are we now? It's really interesting that policy takes a long time. You're normally talking 3 years to be able to develop policy and then implement it. But we now have 27 policies active across the jurisdiction. We've had nearly 450 members trained on inclusive green finance. And for those people in the room who are experts in specific areas here, please reach out to AFI and share your expertise, because we are always looking for organisations to come in and share their knowledge with our members. So there's a real opportunity for you to be able to contribute to this as well, because we've got 12 live in-country projects going on and 11 technical support projects. So this is also areas where in-country you have a really big opportunity to be able to engage with the regulators and help us drive everything forward. So I think really what we want to think about is, and CGAP, I'm really looking forward to their short presentation as well, is where are we going next with all of this? We can't do this alone as a group of regulators. Everything that has to be done going forward has to be done in collaboration. We need to be able to bring financial inclusion together through the private sector, through civil society, and through regulation. We saw earlier in our drawing with the public-private community partnerships, and I think with all of these activities that AFI has going on in 2025, this idea of collaboration to ensure we leave nobody behind is the way that we certainly should be working. So I'm very much looking forward to the discussions today. Thank you so much for giving AFI the opportunity to share a little of our work. And if anybody wants to talk to me about it, I will be around and you're more than welcome to approach me. And I'm very much now looking forward to what CGAP will be sharing. So thank you very much. Thank you.
No, thank you so much, Helen, and that was an incredibly rich presentation, and we will have some time for questions at the end, and I suspect you might be called out, Helen, for some questions possibly as well. And I think just that connection with the enabling environment and the regulator aspect, but really that community-driven information and dialogue is really critical when we're talking about financial inclusion, and that's really extremely well expressed in AFI's work. So thank you so much. So I'm going to now ask Sai Krishna Kumaraswamy, who is a senior social financial specialist with CGAP, to go on with a presentation, but just in 1 minute, because I'm being reminded we also have a Mentimeter for one other question. So yes, if you could just again go back on to Mentimeter, and we'll do one question before we have a presentation. Okay, so this question was, how many adults remain unbanked in the world? We'll see how many people we get this time round. Okay. My eyesight is terrible. I'll give it a couple more people. So we've basically got, the largest number is suggesting 1.4 billion people. So perhaps if we check the answer, we are correct. Well done for the majority of people in the room. That was excellent. All right. So Sai Krishna Kumaraswamy, would you mind coming up and we'll hear from you from your experience with CGAP. Thank you.
I think my job is done. Everybody guessed the answer correct, so everyone's quite familiar with this. Very good morning, pleasure to be here. Maybe I want to give you a flavor of what I expect you walk away at the end of my remarks here. First, I'd like to share a little bit about what's happening in my world of financial inclusion in Asia. Second, I want to convince you that it is an important tool to solve some of the questions of the climate action community that is convened here. And third, offer some suggestions on how to make this marriage more successful and enduring. Because if we have to solve the climate problem, we've got to stick around together for a really long time to come. So with that, I want to begin by saying that financial inclusion is transformative for individuals and small businesses. It can support families to save for their children's education. It can enable farmers to build climate resilience. It can support women in exercising agency, young people to plan and invest in their futures, and entrepreneurs to grow their businesses. It's more than just access to an account. It's about true impact. Indeed, evidence suggests that digital financial services enable 13 of the 17 Sustainable Development Goals that we have. Now, Asia has been at the forefront of the progress in financial inclusion. World Bank data suggests that between 2017 and 2021, access to an account increased by over 10 percentage points in the region. And we have some really outstanding countries like Thailand, Philippines, Myanmar, Cambodia, who have all seen double-digit increases. This is no small feat. A lot of this progress has been surged by Asia's emergence as a hub for global financial innovation. We are seeing an unprecedented wave of changes in technology, in regulation, and consumer preferences. And this manifests as rapid growth in digital payments, both domestic and cross-border, fueled by super apps, platforms, and mobile money wallets, growth in financial market infrastructures like the DPI that we see in India, a rapid expansion of open finance frameworks that allow for seamless and free flow of consented data, again, like we see in Singapore and Asia, innovation in technology and in business models and product types. But this is just one part of the story, right? While high-income countries in the region enjoy near universal financial access, several low and middle-income countries continue to lag. Even today, average account ownership in South Asia is only 68%. And we have outlying countries like Pakistan at just 21%, Cambodia at 33%, and Myanmar at about 48%. Gender gaps persist too, even in countries like India and Sri Lanka, which have overall very high rates of financial inclusion. Women continue to lag men in the use of digital payments by 17 and 12 percentage points respectively. In fact, South Asia is home to the largest share of inactive accounts at 22%, while only 34% adults make digital payments. In addition to this, you also have emerging risks like online fraud, scam, data misuse, and abuse that are eroding trust, the very foundations on which digital finance is built. As if these gaps weren't enough, Asia is also facing an era of intensifying crisis. The region is most disaster hit globally, warming faster than world average, and 7 out of the 10 most climate vulnerable countries are in the Asia-Pacific region. Extreme weather events threaten densely populated cities and agriculture-dependent economies. You have heat waves, droughts, and erratic rainfall that threaten food security, while macroeconomic challenges like rising debt levels, slowing productivity, and aging add pressure. In fact, a UN report warns that at this pace, Asia will manage to achieve its sustainable development targets a full 32 years late. This is a warning bell, but all hope is not lost. We could potentially harness the power of digital and financial innovation to solve some of Asia's most pressing challenges and fill these gaps. Inclusive finance is a powerful tool and an opportunity to channel climate finance into the hands of those who need it the most, help them build long-term resilience, and adapt to changing climate realities. Now, CGAP has expounded elaborately on these linkages in our flagship advocacy piece called 8 Billion Reasons, which has calls to action from senior leaders such as Ajay Banga, the World Bank president, and Queen Maxima of the Netherlands. You can read more about this in the report, but here I want to dwell on certain specific examples when I say how digital finance can be channelized to answer some climate problems. Take the example of BRAC in Bangladesh, which has piloted a contingent line of credit. This makes funding available to farmers when certain climate thresholds are triggered, thereby allowing them to rebuild their livelihoods without spiraling into debt traps or going into poverty. This has allowed for them to expand the area under cultivation by 18% and increase their yields by a whopping 35%. Or SEVA in India, which is piloting an extreme heat loss insurance that protects the daily wages of low-income workers during heat waves. We have also learned the importance of focusing on women. When women have access to savings, they invest more, they smooth their consumption, and they avoid resorting to negative coping mechanisms like selling household assets or pulling kids out of school. The She for Shield study commissioned by AXA and IFC also confirms that when women have financial security, they strengthen entire households. Women who had access to inclusive insurance extend protection to their children, their spouses, and their parents. But it's not just for climate adaptation that inclusive finance matters. It can also increase the uptake of green technologies, which is necessary for mitigation and a just transition. Pay-as-you-go solar home financing systems, which allows users to pay flexibly depending on usage, has successfully extended access to clean, affordable energy to more than 100 million people worldwide. And you have the example of Samunnati in India, which finances for women-led farmer-producer companies climate-smart technologies like biodigesters and solar irrigation pumps, which not only bolsters their economic resilience, but also increases their income earning prospects. And Helen just mentioned about parametric insurance in Fiji just before me, which extends a social safety net to welfare recipients during times of disaster. Now, these are all a vignette of solutions that work, but the problem is they don't scale. And the bottlenecks are lack of enabling policies, funding, and scalable business models. So how can we build on this progress? We need all of us to come together. We need financial sector authorities and regulators to create an enabling environment. Clear policies on consumer protection, data privacy, cybersecurity are essential for digital finance to thrive. The private sector must take the lead in designing and scaling innovations, but at the same time, making sure they meet the needs of different segments of consumers and they are accessible and inclusive. Public-private partnerships are key. You need the governments to take the lead in building financial market infrastructures like DPI that we've seen in India, while businesses can innovate on top of these rails. And finally, funders and sector support organizations have a very important gap in filling the remaining gaps. You need them to test and scale early-stage solutions to make sure that these market-based approaches are indeed accessible for those who are excluded. Now, I want to close by reflecting on Ajay Banga's call to action about working together. At CGAP, we believe financial inclusion is more than opening an account. It's about true impact. We have a unique opportunity to pool the resources, the talents, and skills in this room to shape a truly sustainable future that genuinely leaves nobody behind. But for this, we need to act fast, we need to act purposefully, and we need to act collectively. Now, we need businesses, we need regulators, we need development partners and the private sector to come together to make this happen. And I'll leave you with this challenge. What role are you going to play? Are you going to create new partnerships today? Are you going to innovate responsibly? Or are you going to advocate for policies that prioritize the needs of people who need them the most? We have a fantastic opportunity here to seize this moment together to build an inclusive, resilient, and vibrant Asia, and in doing so, creating a better future for everybody. I thank you very much for this opportunity, and I look forward to our continued collaboration and conversations.
No, thank you so much for that really very interesting presentation. And I think there's a lot of wealth behind what you've just said in terms of the model of what needs to be done to enable more financial inclusion. So again, you might get some questions from the audience as we come to the closing part of this session. We've got one more Menti before we start with our panel. So if you don't mind one last time, we will go into the question that will come up on your screen. Give you a minute, and for those who are the panelists, I'll be calling upon you in a minute. Okay, so the question is, what financial products and services would you like to see more of to help with local climate adaptation? And you can choose up to 5, so we'll see where there is greater interest, I guess. There's a lot to choose from, I think, so I'll give you a little bit of time here. So we do have quite a lot of popularity around agricultural credit, community-based savings groups, disaster risk financing, weather index insurance and microinsurance, but it's still very popular, even the mobile banking, savings accounts and microloans. I mean, this is just a sample, I guess, of the types of financial instruments that can be used and that provide opportunities tailored to the needs of different populations. But it gives us a sense of where you may find your community needs are the greatest. Okay, wonderful. So we're going to now move to the panel. And I'm just going to call up Pia Romantayag, who is the Assistant Governor for Strategy, Innovation and Sustainability at the Banco Central Pilipinas in the Philippines. We've got Prerna Saxena, Asia Lead for Better Than Cash Alliance at UNDP. We have Zonabel Woods, the Senior Social Development Specialist for Gender and Development at ADB. We've got Saranjana Gupta, the Senior Resilience Advisor for the Huaru Commission. And we have Shamit Chakravarti, who is ADB's advisor for the Human and Social Development sector for the Pacific and covers ADB's social protection thematic work. Great, thank you. All right. So we're going to start with Pia, and you're working with the Banco Central Pilipinas. As a central bank in a country that is facing increasing climate risks, how is your bank, BSP, approaching and supporting financial inclusion in the Philippines? And what do you see as some of the key challenges and opportunities to enable access to a broader range of financial services for poor and vulnerable communities? Thanks.
Thank you. Thank you for that question. First of all, good morning, everyone. Thank you to ADB and all the partners that have put this very timely conference together. in the Menti survey on our first day, yesterday, you asked what sort of skill sets or expertise you're bringing into the table. And I saw that central banking didn't even come up. I guess I was the only one who put it. But I think it's a good start. So thank you for inviting a central banker to this discussion, because I think this intersection is ever more needed based on the discussions yesterday and what we have heard in the scene setting today. So for financial inclusion, I have actually personally worked on the financial inclusion journey of the Philippine Central Bank for 2 decades now, primarily because of the potential it brings, as we saw from CGAP and AFI. We have banked millions of Filipinos who are now part of the formal financial system. We see access to a savings account, credit, insurance as really an important and empowering tool for them to manage their lives and their livelihoods. But I think we have to have this discussion with climate, those who are working in the climate, those who are working in community development, because the challenge is even greater. And one, I want to highlight the potential. We saw 1.4 billion people still do not have access to the formal financial system. 80% of those live in most climate vulnerable economies. So 80% of the currently unbanked live in climate vulnerable economies. That's globally. In the Philippines, 4 of 10 Filipinos face financial challenges due to emergencies caused by natural calamities. So here I'm highlighting the importance of being included in the financial system as a safety net in the face of inevitable climate challenges. So that's the challenge. The opportunities, we are already seeing it. In the Philippines, there was a recent survey just last year of those accessing microfinance and financial services. 17% of those who were surveyed used credit as their most utilized adaptation tool during typhoons. And this is the most, compared to only 16% financial assistance from family and friends and 16% from the government. So we have talked about social payments yesterday, but we can see that credit is still the primary tool when they are met with shocks. And this is a survey last year in the Philippines. We also saw when Typhoon Haiyan hit the Philippines, one of the most powerful typhoons, those that had access to insurance were able to rebuild their homes within 1 to 6 months, as compared to 12 months and above to those who did not have insurance. So I talked about the challenge, I talked about the potential, in the sense that financial services can actually support the resilience of those that are faced with climate events. But I am the first to say that more needs to be done. So as I said, I've worked on financial inclusion for 20 years. We've seen success in the Philippines, but there are challenges, and challenges mainly because of the vulnerabilities we face in the face of climate change. So one critique about financial inclusion is that it is not just access to financial services as the end in itself. It has to really it has to really respond to the needs of the clients and really respond to the worries that they have. And climate is one of them. So we need to be, the challenge for the financial system is to need to be more responsive to what those products need. It cannot be the off-the-shelf financial inclusion savings and credit. It needs to incorporate and internalize what it means if the need is based on a climate shock. So that's one. The approach also needs to be more inclusive, looking at priority sectors. I'm glad to see agriculture as one of the ones that got the most votes. Sectors like the agriculture sector and MSMEs need a little bit more than just basic savings and credit. MSMEs lack the financial and technical capacities to meet ESG due diligence certification verification. How can they be part of regional and global value chains? So training on ESG compliance and sustainability reporting is needed to also mobilize financing. In a country like the Philippines, where we also have small financial institutions like community banks, NGOs, they themselves are vulnerable to climate. So how do they incorporate climate risks so that they can continue providing services to the others? So this is at the meso level. We have to be thinking about that. Again, financial products need to be more tailor-fit. And finally, also insurance as a main tool for resilience. There is really a low uptake on insurance, especially in the segments that need it most. So this is a challenge to the private sector in terms of how can they price insurance properly so that it could be accessible. So we have very good gains on microinsurance globally in the Philippines. We have about 60 million people already covered by microinsurance, but still more needs to be done. So I think these are some of the things that we still need to do. But aside from that, I think when we look at the bigger challenge of adaptation, and yesterday it was so inspiring to hear about community collaboration to build green infrastructure, for example. That was the spotlight that I attended. How do you link this to the financial system? So I think the role of a central bank is to make sure we catalyze and enable the financial system to support the climate objectives of our respective countries. It's hyper-local, as we heard yesterday. These contexts are hyper-local. How do we channel the financial system towards that? Taxonomies is one. We're doing an adaptation taxonomy. We're looking at a transition taxonomy. But there we need a collaboration. We won't know what activities need to be funded if we don't have that dialogue with the sectors and with the community. Data is one, and I'm not sure if this for this audience, but this is definitely a need for central banks if we want to catalyze the financial system to support this. We did this for financial inclusion. We started with surveys. We put this out for the public. We need to put the data of the cost of adaptation, the benefits of adaptation, because that is the only way you crowd in private financing. So those are the things on the agenda. I mentioned I have my focus has also evolved. I don't oversee financial inclusion anymore, and I oversee sustainability. So it is the same journey that I hope that we are taking and where we want to see financial inclusion to really respond to where the need is the most, and this is where the need is. And we need to have these collaborations to understand how that could look like for both the communities, the financial service providers, and the regulators like ourselves. Sorry for the lengthy response to your question. I just feel quite passionate about this convergence and look forward to more conversations. Thank you.
No, thank you. Thank you very much. As you say, we don't have really a lot of presence from central banks in the room, so it is incredibly valuable to hear your perspective and what the Philippines has been doing. So thank you so much. We're now turning to, Prerna Saxena, the Asia Lead for Better Than Cash Alliance at UNDP. So my question for you is, why are digital financial inclusion strategies so important for building climate resilience, particularly in poor and marginalized communities? And what are the challenges and opportunities for transitioning to digital payments for climate vulnerable regions? Thank you.
Thank you. Good morning, everyone. Thank you for having me here and giving Better Than Cash Alliance an opportunity to talk about our work through various sessions. I think we've heard enough about how financial inclusion can build resilience in communities and how several products, whether it is savings accounts, whether it is loans, whether it is insurance, and bundling of them in a wise manner can support livelihoods from getting impacted on their journey to coming out of poverty. But one number which sometimes we don't focus much on is that in the last 1 decade, 250 million people were displaced because of climate risk events. And unfortunately, 80% of them were women, which again shows the need from the governments and from partners to build social protection nets and also to give them adequate economic security, not just for themselves, but for their families. And when it comes to that kind of crisis, we have noticed that digital payments is the way forward in bringing these vulnerable communities and bringing women particularly into formal financial systems. And there is ample evidence that worldwide, when governments make social transfers digitally, when they transfer money to people's accounts, that is the reason when most people, 35 to 40% of people, open their bank accounts for the first time. So I think that is a clear evidence that governments have a strong role to play here. And not just governments, even corporates, when they work with women or small businesses in their supply chains, and they transfer wages or payments to vendors digitally, that's when the bank accounts get opened, because otherwise, I think there is still a perception that opening and maintaining a bank account is a big hassle. We have still not reached a stage where underserved communities feel welcome and feel comfortable in engaging with the financial systems. So that's how at Better Than Cash Alliance, we work with 80 of our members, many of them governments. We work very closely with BSP, with many of the other emerging economies. And we work with corporates with a very laser-sharp focus on digitizing payments in a responsible way. We came out with UN Principles for Responsible Digital Payments, which were launched by Honorable Finance Minister of India, wherein we talk about how payment systems should work with user centricity, how we should be prioritizing women, how we should be keeping data secure, how we should champion the entire value chain accountability. It's not just about you initiating the payment to the account, it's also about the user being able to access it, and access it as and when they want, in the form they want. Promoting interoperability. So unless we champion all these aspects, we will not reach a stage where digital payments can really be the game changer in climate risk events. And hence, even when we were engaging with ministries of finance, ministries of social welfare, ministries of environment in several of our member countries, we realized that there is a need to bring them all together. There is a need for them to work in a cohesive way so that they are not sitting in their silos, but they are consulting each other when they are developing social welfare and social protection programs. So in COP29, we came out with a call to action for governments as well as our other corporate members to leverage digital public infrastructure, including digital payments, to promote climate resilience of livelihoods. And therein, what we have also learned after engaging with several of our member countries, also engaging with several civil society organizations who are our members, that countries which have invested in advance in building digital public infrastructure, be it India, be it Bangladesh or Pakistan or even Philippines, those countries are better prepared to manage livelihood risk when climate risk even happens. So it's not an overnight preparation that you can do. Countries have to invest in advance in providing digital identities to people, ensuring that digital identities are working and accessible in real digital format, and they don't really are just a paper. And digital identities are used for opening bank accounts, and not that you have a digital identity and still you need an address proof to open an account, you know. So reaching that level of efficiency in digital identity, then of course having digital identity linked with several welfare programs so that digital payments can be made, and then enabling data exchange across various government systems and ministries so that if one ministry knows that this particular community or end user needs to be reached, that data seamlessly transfers to other ministry or other programs database so that that cycle doesn't have to start from scratch. So this kind of preparation is needed, and in many countries we are working with the governments to do that. However, after all this is done, because you also asked about challenges and at the user level, I would like to say that even after all this is done, several times users don't feel confident of engaging with formal financial systems because of the customer protection issues. I mean, they still don't feel that their digital funds would be used or would be accessible when they need it. And this is what we have also come across several times, that even if the cash, or I mean, they are still called cash transfers, even though they are digital payment transfers, when they are done to the accounts, when a crisis event happens, the users or the beneficiaries are looking for avenues of cashing out. They still don't feel confident, and there are not enough avenues for them to use digital funds for the reasons that they want to use it. So they sometimes are not able to use digital funds for buying groceries, or for moving from one location to another location, or for even having a better shelter on their heads. So as an ecosystem, I think we have to invest energies on having these digital funds accessible and usable across use cases. And that's where we are working on. And then if something goes wrong, the customer should be able to access grievance redressal mechanisms in an easy-going way, without feeling intimidated and without feeling that nothing will happen, I'll just waste my time in reaching out to various helplines and running around branches. So that is where I think more work is needed. Thank you.
Thank you so much, and it's a very rich landscape for all of the work that can be done in the digital world. We've heard a lot of references to gender and women, the challenges for women, and I have the pleasure of asking Zoni Woods, who's a senior social development specialist focused on gender and development at the ADB, to help us really understand those challenges and opportunities as well. So my question to you, Zoni, is financial inclusion is central to managing climate risk and supporting the adoption of climate resilient livelihoods. But what are some of the specific barriers that women face in accessing financial services to pursue resilient actions? And what are some of the examples of successful approaches that have been used to overcome those barriers?
Thank you very much. And I think my job is actually fairly easy this morning, because so much was said in the earlier presentations about financial inclusion for women. And so given that we have a limited time, I will just try to focus on a few things that I sort of jotted down in order to help me keep to my time, because this is such a big issue. I think, first of all, we have to look at enhancing women's financial literacy as a really critical strategy in bolstering women's resilience against climate-induced shocks. So giving women the knowledge and the skills necessary to really effectively manage financial resources. And this will help them make more informed decisions in terms of accessing financial services. So according to Women's World Banking, approximately 753 million women in climate vulnerable countries are excluded from financial systems. So this really exacerbates their vulnerability to climate shocks. And so financial literacy enables them to utilize the tools such as savings accounts, insurance, and credit facilities that we've been talking about this morning, so that they can enable sort of better adaptation and mitigation to the effects of climate-related events. So one example is that women with formal savings accounts actually experience 22% less financial loss compared to those holding cash during extreme weather events. So generally, I would say that the barriers fall under three sort of categories. One of them is around social and gender norms, and we actually haven't really talked about this a lot this morning. So, in many societies, is still traditional roles and expectations continue to limit women's financial autonomy. They may restrict women's mobility, decision-making, and access to financial resources. So I think we still need to address sort of the existing social and cultural norms that may hinder women from accessing, financial services, including digital services. And that leads me to the other one that is really critical, and I think it's been mentioned a few times, which is around the digital gender gap. I think we will not be able to see the power of digital finance as the game changer unless we actually address the digital gender gap. And so with this, we have to look at sort of again, the social norms, the limited access to technology, which really will continue to impede women from accessing financial services that are increasingly being offered through digital platforms. And I think this other one has been talked a lot about, so I won't go into this, but really there's a lot of work to be done still on legal and institutional barriers. So in the interest of time, some of the strategies that have been working for women is really around community-based financial education programs. These are still relevant. We've been doing these for a while, but these are still sort of a very relevant building block for financial inclusion for women. So these are things like training sessions that focus on financial management, on budgeting, on the use of financial services. So these programs should still remain kind of a cornerstone of this work. Really looking at how we can integrate digital tools, so leveraging mobile technology to deliver particularly financial education can really help us overcome some of the pressing issues around accessibility. Collaboration with financial institutions, so partnering with banks to develop really women-centric financial products and services that can encourage the adoption of formal financial systems. Now, I just very, very quickly to share some of the successful approaches. So, for example, in terms of policy, regulatory reforms, something that the Reserve Bank of India has done is introduce policies aimed at enhancing women's access to financial services, recognizing that they have a critical role in financial inclusion and economic development. So the other one is around, I think the example of Fiji has come up a couple of times. So it's really great to see that they are sort of leading in this space. And this is where the Reserve Bank has implemented parametric microinsurance to bolster the financial resilience of vulnerable communities, particularly women, smallholder farmers in flood-prone areas. And then finally, in the Maldives, you have the instant payment system, which is called Favara, that enables customers to send and receive money nationwide within seconds, really creating a convenient and affordable access to digital services for women. So I will just close with sort of a couple of thoughts. I think the issue of supporting women's networks has came up quite strongly yesterday, and I think this is something that we need to continue to look at, particularly through the lens of the CRPP. Small grant funds are really critical for community groups. We have some great examples in the region through the work of the women's funds, and I think we need to look at these to provide grants to empower women to foster sort of more financial inclusion. And then I think just to underline that we do still, one of the areas where we still need to work on is really gender transformative financial products. And I think, as ADB, we continue to engage with our developing member countries on this issue through a number of projects. And we have some good examples that perhaps we can find some time later to talk about. Thank you.
Thank you. We might be asking you more about that as we go to questions. So thank you very much, Sonny. And I think, yes, just to touch on the grassroots element and some of the just in the field experiences of enhancing women's literacy and support to women. There's so much that can be done that isn't necessarily innovative, but has been done for a long time and is so critical to be the fabric or the entry point for a lot of this work. So thank you for all of those observations. I'm going to now turn to Suranjana Gupta, the Senior Resilience Advisor for the Haru Commission. So I just had a question for you as to, for your experience when you are interacting with grassroots women's groups, what do they express as their principal needs in terms of access to finance and financial services? And how can informal mechanisms complement more formal financial inclusion products and services, especially in the context of addressing climate risks?
All right, thank you so much. I think it's great that Sonny Woods just spoke of gender transformative mechanisms and processes, so I'll kind of take off from that idea. As the WIRO Commission, we're a global network. We see ourselves as a social movement that's focused on building grassroots women's leadership. So our work on disaster and climate resilience is very much focused on how do we promote the collective leadership of women to make the changes that they need to drive decision making so that they can identify and build on and aggregate solutions that are advancing their resilience. But at the same time, we need to build in this, the challenges around empowerment, so that becomes a very central feature of our work. So I think most of us have been talking so far about financial inclusion as sort of building mechanisms that provide financing to individuals. I think my remarks are more focused on how do you support grassroots women's groups and organizations to do the work of building resilience that is transformative. So we've been using a mechanism that we call the Community Resilience Fund, through which we flow resources to our member organizations across Asia, Africa, and Latin America. And as we were developing the fund, I think we tried to think quite carefully about what is it that grassroots women's organizations actually need in order to do their work. So we have designed the fund so that our members can actually do 4 things with them. And so in addition to what I would say is sort of some of the more obvious work of understanding and analyzing risk and prioritizing risks, and then sort of taking collective actions that are risk-informed, we also lay emphasis on enabling groups to invest in organizing and leadership, so strengthening their organizational structures and the collective leadership as well as the individual leadership of grassroots women, building networks and coalitions that allow them to scale up their work, pool their knowledge, transfer solutions that work, learn from one another, and as well as advocate together, and advocate with public decision-making institutions from the local level to the provincial to the national level to the global level. So essentially the funds support these 4 elements, which are building leadership and organizing, actually enabling the understanding of risk and risk-informed actions, enabling coalition and networking, as well as building partnerships and influencing policy. And what's emerged in terms of the technical work, what I would call the technical work or the material work of adaptation and resilience building from the experience of grassroots organizations, they've primarily invested in building more resilient food and farming systems, in upgrading infrastructure or conserving natural resources, securing assets. I think particularly land, securing land is a very crucial feature of many of our groups, and doing the sort of DRR and early warning systems and emergency preparedness work. So I want to focus for a few minutes on this, what I consider to be some of the important features of this kind of financing. One is to maintain a sort of flexibility that doesn't sort of pre-program the money too much in terms of what sectors you can address. Because invariably we find at the local level, people have to develop their own answers to what they need to address. So we kind of stay away from saying, you have to focus on farming or agriculture or food systems or food security. So having said that, we see a lot of our groups looking at food systems and food security and farming systems. Naturally, this is what the local rural groups look at, and then the urban groups look a lot at creating better infrastructure, access to services, looking at things like water supply and sanitation. And I think the second issue is that we're very cognizant of the fact that you need iterative funding in order to learn and innovate and create solutions through trial and error. So our Indonesian colleagues are here, and you can hear more from them in the breaks about the ways in which they've tried to first set up a rice bank. They found that there were problems related to getting the supply of rice from local farmers, and the people running them didn't have, couldn't sort of get a stable income out of that or revenues from that. Then they developed that into grocery shops, which kept a larger range of produce and products, but then they couldn't compete with the local other supermarkets, which were perhaps more accessible with cheaper products. So there's been this iterative process, and what women are saying is when we go to a government training program, we actually don't, only those with capital can actually put into practice what they're learning in enterprise training. And most of the time, you actually get one chance to get capital and then use it to develop a successful business. So I think it's important when we're talking about innovation in the context of adaptation that we allow people to make mistakes and we provide that kind of iterative funding. The last thing with inclusion, which is very important, I think, is this idea of financial literacy. Again, we're mostly thinking about it in individual terms, but I think that with grassroots women's organizations, they have to have the money in hand in order to learn how to manage it collectively and strengthen and build their systems. So they cannot do that in a theoretical sense. So people have to have that money in order to learn and set up and invest in the systems that are required to manage the money. Otherwise, we're in a sort of chicken and egg phenomenon where groups are told that they cannot access money because they don't have a history and track record of managing the money, but they need the money to learn to manage it. So I think in closing, I would just remind us that the work of adaptation that needs to be financed is not just the technical work of adaptation that shifts the sort of relationship between local communities and their natural resources, but the larger work of transforming institutions, institutional structures, enable them to learn, evolve, and create a more enabling environment for grassroots groups who work with the poorest. Thank you.
Thank you so much. And I like the theme that we're getting with the transformative approaches that are coming here. And I think it's a great segue to Shamit Chakravarti from ADB, who is heading our thematic work on social protection, because there is a systems level element to all of this work as well. So my question for you, Shamit, is you have a great depth of knowledge and experience in developing investment programs in the context of social sectors in the region. So what are some of the ways you think social sector work, such as in social protection and education, can be better linked to financial inclusion for building the resilience of vulnerable communities?
Okay, thanks, Kate. I think before I answer your question, I'm going to ask a science trivia to everyone here. I'm sure all of you would have read about this maybe in your grade 9 or grade 10 physics textbook. You know, this concept of escape velocity, you know, maybe I should have asked Nisha to do a Mentimeter on this. Escape velocity, basically the minimum speed which, you know, an object needs to escape the gravitational pull. Now, escape velocity for the Earth is 11.2 kilometers per second. For the moon, because the gravity is much lower, it's about 2.4 kilometers per second. So when we look at the problem of development and, you know, helping to move people out of the poverty trap, in some senses, we are all trying to help the poor and the vulnerable, you know, who were not as fortunate as us to have been born in a big city, to have had access to education and health. How do we really help all of them to move out, to escape, to graduate out of poverty in a manner that is sustainable and they don't keep slipping back? So coming to your question, I'd like to use the example of the Philippines because you know, ADB has been working very closely with the Philippines, and I'm very happy that we have a representative of BSP here because my example will allude to our work with them. When we are designing a social protection project by ourselves, we can't do anything about the financial regulation, the banking system. You know, that's way above us. So we need to have, we need to take that as a given almost. But let us say in the example of the Philippines, the ADB has been engaging with BSP for many years now through the Financial Inclusive Development Program, where ADB worked with the BSP to help them come up with rules and regulations to roll out their financial inclusion program, to strengthen prudential systems, to prepare the framework for various kinds of digital platforms and so on. So that is at the macro level. Now, we in ADB from 2009, 2010, at the ground level, we've also been partnering with Department of Social Welfare and Development, you know, the Panta with Pamilya Filipino program. My colleague Karen here, she processed a loan. Then, you know, when I took over from her, I worked with DSWD for about 3 years. Unfortunately, last 3-4 years, I was posted in Bhutan, so some of my information may be a little dated. So when I was working on the program, I was taken aback that Philippines, the level of financial inclusion is very low. If you go by 2017, 2018 data, it was just about 34%. You know, have access to formal financial institutions. And compare that with the numbers for Thailand, it was about 82% then, Malaysia about 89%. I'm sure that things have improved. So through our social protection program, we were working with the government to give cash transfers, conditional cash transfers to incentivize poor families with children below the age of 18 to send their kids to school, to make sure that they have 85% attendance, to make sure that the women were going to the clinics, to make sure that the kids were getting their vaccinations and so on. But in 2014, 15, 16, what could we have done vis-a-vis financial inclusion? Not much. Even when I was doing this loan, I remember it was only through the land bank and their cash cards that the 4Ps beneficiaries could access that money, you know, the conditional cash transfer. But it was a very, I mean, they could just withdraw the money. They couldn't, it was not a savings account. They couldn't get money from other platforms. And in fact, the perverse thing was, if suppose the two of us are from the 4Ps, and if we don't want to withdraw the entire 1,500 pesos, if we keep it there, then the Commission on Audit might add up all the remaining money there and say, hey, you know, X million pesos is still in that those accounts, which means that maybe we are not the targeted poor. But over time, what has happened is with the spread of PhilSys, the Philippines National Digital Identity, again, ADB, through the policy program, we worked with them to help them roll out PhilSys, to create the registration platform for the, this listahanan, the people in the list of the poor. And I remember in 2020, I think the target was that the first 5 million people to have the national PhilSys connected bank account would be from this list of the 4 Ps. Today that has gone up. Now, the point is today the 4 Ps beneficiaries, they have a transaction card where they can get money from different places. They can save, they have a sense of agency, they can do it, they can use it to do so many more things. So, we are kind of helping them to reach that escape velocity. School enrollments have gone up, health coverage has gone up, but financial inclusion was a big weakness. But the point I'm saying is we are able to do it only because at the macro level, the financial institutions, the banks, by the way, these 4 Ps beneficiaries can also, I believe, use those cards for GCash and so on. Yeah, so you can imagine the multiplier effect. So today, digitalization really helps us, what we wanted to do 10 years back, but we couldn't. But today, with this phenomenal advancement in terms of biometrics, in terms of securely transferring money to the accounts of the ultimate beneficiary, that gives us a lot more scope. So ADB, when we are designing our projects, I believe even the one in Laos, we are actively seeing how we can combine financial inclusion with our social protection. Education, of course, even these 4 Ps families, we have these family development sessions. There are modules on financial literacy. Just before I end, just yesterday I was just checking up, some numbers on, let us say, India's, what we call the Jan Dhan, it's called the JAM Trinity, Jan Dhan account, Aadhaar and mobile phones, they're all linked. I believe there are 550 million low-frills bank accounts today. I believe about 300 million are, women are the main account holders. And today the government of India is transferring benefits for about 323 schemes. I was stunned to see the number of schemes cutting across multiple ministries. So, hopefully the problem of bogus account holders has gone down. Hopefully the money is reaching the beneficiary much faster. So yes, climate change, again, kind of increases our escape velocity. Aging, will also pull people down. Digital, robotics, automation, AI. Just yesterday, you would have seen the news that DBS in Singapore is going to lay off about 4,000 workers. So while we are trying to push people up, but there are these other kinds of forces which are kind of pushing us down, but this tussle will go on. So again, before I close, this conferences like this, the good work being done by AFI and CGAP and grassroots organizations with the help of multilaterals like ADB, together, that's our hope, that we continue to push the vulnerable people so that they can graduate out of poverty. Thank you.
Thank you so much. Yes, and it is, I think it was said at the beginning by our CGAP presenter, what are we each going to do around this issue? And we all have a role to play, but it is diverse, and there's much that can be done. There is a lot of opportunity. There are challenges, but I think we have a lot of the answers to overcoming those challenges with many success stories already in place. I'm aware that we are at the limit for time, but I do want to just turn to the audience for just a few minutes just to see if we can get some questions from the audience, because I think your experience and expertise would be great to hear. So if anyone would like to come up to one of the microphones, we'll just try and get a couple of questions in at the very least, if anyone would like to come. Maybe everyone is desperate for coffee, is that the case? Okay, I'll just ask one question if that's all right, because I think speaking about all the different actors and how to, you know, from the regulator and the banking perspective through to the grassroots level, it is, how do you get that conversation going, and who is actually provoking that conversation around financial inclusion for the most vulnerable? To ask a bit of the question that was asked at the start is how can each of us play a role in really advocating for financial inclusion? Just if anyone has any reflections on that. I see, Pia, you're nodding your head, and I'd love to hear your perspective.
Yeah, no, that's a very good question, because typically you'll think central bankers or regulators are very far removed from grassroots activities such as this. I think first is that there needs to be at the level of the regulator an appreciation of why this is important for its mandate, but also for the economy. So for a country like the Philippines, where, as we heard from our colleague, the inclusion levels were so low, what good is a sound and stable financial system if it doesn't benefit the population? So that was the motivation of the central bank, and it also supports stability, you know, if you're banking a broader base of the population. So starting with the alignment of the benefits across players. So central banks, we have something in it. The banks also have something in it, because for financial inclusion, they were just serving the tip of the iceberg in terms of the market. There's actually a broader market out there. So what we needed to do was show that to the banks. You know, as I said, we started with data. You're only banking this segment of the population. Imagine the products you can roll out with this. We put down the rails for the payment system. Now we have a lot of those wallets. So first, finding out what's in it, why is it important to you, and then learning from the different players in the chain. So when we started our financial inclusion work in 2001, we were going down to microfinance institutions, trying to understand how they were giving out loans. Then we amended our regulations because some of them didn't consider these types of loans, of frequent amortizations, no collateral. So we had to amend those that were actually barriers, and we didn't know. So there's a lot to learn from this type of conversation. That's why I said in this space and climate, we need to learn what is happening on the ground in terms of building resilience, because that might inform some of the policies that we put in place.
Oh, thank you. And I'll just finish up, but to go down to the grassroots level, I mean, Suranjana, from your experience with the Oharu Commission and working with grassroots organizations, how does that conversation happen with these regulators and at the national level?
It's a great question, actually, and I think we need to find more ways to have the conversation, because I feel like it's kind of a one-sided conversation, and I was thinking earlier, maybe we have to also find a new language, even this formal versus informal, because informal, flexible, this is all language that sends all the bankers and financial institutions running for the hills, right? And it's very discomforting. So I think that we are often, the conversation happens not enough by design, but by default when we find ourselves sort of doing things that we think are smart, sustainable, innovative, but are in some way not acceptable. So for example, many women's groups will take the resources from the funds we provide and give them to their cooperatives or their, local grassroots savings groups, where they will use these funds as revolving funds. And that's a way of sharing the resources and making sure that the resources are sustained and lots of people get access to them. But then we found that our donor didn't want us to have revolving funds. So we start finding out sort of when we are not conforming to some of the rules, as it were. And yet, with this formal and informal, we know that in Asian cities, the way they're growing, incomes are coming from informal sector jobs, much more than formal. So where is the growth and the dynamism coming from and the innovation coming from, and how do we capture that without killing it, I think is the big challenge for us. So yeah, I don't know if I'm not sure I answered your question, but we need to find more ways to have the conversations. Thanks.
Well, I think you had remarked earlier about flexible thinking as well, and flexible approaches, and we are talking about, as we say, a hyper-local context, and that flexibility does kind of need to be built in, at all levels to think through the different types of realities and the tailoring that has to happen when we're talking about different community needs. But no, thank you. I mean, it's a question that I've had in my head for a long time, so that's why I just thought I'd ask here.
Well, if I may add one line, I think one of the ways to have the conversation is to bring us in at the design stage, when it would be easier to have the conversation then, and it would
Absolutely.
I think really, we'd end up doing some innovative things together.
And I think we're going to be doing a bit of that discussion as we go into the rest of today, and so I will use that as an opportunity to move us on to coffee in a minute, but just to also allow us to understand what the rest of the day will look like. We are going to be moving out into 2 spotlight sessions, I understand, after this. I've been told that there's going to be a reconfiguration of the room, so if you could please pick up your things to take them on into the next 2 spotlight sessions, which I will just quickly read out for you so you can pick which one might be of interest. One of the spotlights is on leveraging pro-poor digital financial services for climate resilience. And the second one is on developing pro-poor climate resilient financial services for women. So we've got a more digital focus and a gender focus set of spotlights to go into before lunch. So with that, I just want to thank so much the panel for coming up and answering all the questions asked of you. And yes, and please go and enjoy your coffee and the spotlight. We are a little bit over time, so maybe we will just go into I'm looking for someone into the spotlights in about 10 to 15 minutes, which I think would take us to around 11:10. Okay, so thank you very much. Thank you to the panel. Thank you.